Officially, good morning. Happy Sunday. Welcome to Market Watch Group's Sunday Market Insights. My name is Scott. I'll be your host. We have an amazing crew here. I have a feeling this may be our best analytical day yet. I don't know why I'm saying that. I just feel that that's what's going to happen. Okay. As always, please keep in mind that what we do is for education and illustrative purposes only. Nothing is intended or should be construed as a recommendation to buy or sell any security or financial product. We're not brokers, nor are we advisors. Any decision made is based on your own risk. Yes. I'm sorry to hear it, Bob Walker. I understand. We were the primary caretakers for my mother the last 2.5 years, and she had Alzheimer's, and it is really, really, really difficult. So our hearts go out to you, my friend. What are we going to do today? Let's talk about the market. I think that makes sense. The title of the class is Market Insights, so let's go find some. Let's go have some. Economic calendar. Big week ahead. We'll talk about that. Sector searching. Sector searching is... we ran a couple more searches. So... as we look at sector rotation, and then as we look at our watch lists, let's see where the deficiencies may be. One of the things I like to do is separate the watch list into sectors for the weekly opportunity list. I was thinking maybe I should run that same thing on our big watch list and see what the distribution looks like, and maybe a pattern will show up that's like, oh, you know what? We could really stand to add a few stocks here. I might do that for Monday. Maybe we'll do it Monday together. That sounds like a good working session. What's the rubbish about Trump and Jer Bear? Jer Bear is the man. Jer Bear is the man. He will not kowtow to the pressure. And I think that's recognized. Did you guys see the clip where he's like, yeah, it's gone up to $3 billion, and you can see Powell like shaking his head, looking at him like, what are you talking about? And then another senator's like, yeah, 3.1, maybe even 3.2. He's like, you just added a building that was built 5 years ago. What are you talking about? It's pretty funny. Jer Bear channeled his inner Alan Greenspan. Notorious Alan Greenspan. Watch list maintenance. Everything's looking pretty good. The question is, do we need any more? And then we'll create our early opportunity list. And we are switching gears. Last week, we finished our trading rules aspect of our trading plans. And now we're going to move on to... risk management. Risk management is next. Okay, let's get to it. Oh, there it is. Signs of stock market euphoria. We just capped a 5-day streak of record highs. I mean, I don't understand the whole like record highs thing. That's what the market does. It's pretty much a lot of time doing that. I want to go back 10 years. SPY. And I'm going to go weekly. Okay, so, back here, this is 2017. This is when Trump came into office. It was at record highs here. This was record highs. So then when this gets to new record highs, it's new record highs and new record highs. And then we had the pandemic, and then we came back. And then this is when Biden came in. These were all record highs. What does that mean? It doesn't mean anything. It just means that the market kept going. And then it fell apart. And then it came back. And in 2024, guess what? Record highs all the way up. Record highs. That's just how it works. I mean, that's the expectation. New companies, old companies fall apart. They shut down. New companies come and they work. And, if a company's no good, they're going to kick it off the S&P 500 or the NASDAQ 100 or whatever. And they're going to bring something new in that is good. And it's going to keep going up, up. That's what it does. It goes up. So, this whole concept of record highs, it's kind of meaningless. It's like, well, we had a consolidation. Will they split the S? Yeah, that's a good question. They haven't, but they might. That's a good question. Anyways, so this whole we're hitting record highs, but what about this? Yeah, that's just how it works. We were at record highs here, and then it had this. I think we did. That's our bear market touch right there. So we touched it. I mean, do we say, oh, that's our bear market? I don't know. I mean, that's kind of, it was definitely a big consolidation. It touched bear territory, and now it's recovered. We had a nice V there. But don't let record highs. We're full of record highs all the way along, all through here, back here. Let me see if I can even go 20 years. Okay. So right at this point here in 2013, from here until here, for like a year and a half, it was nothing but record highs. And then there was some consolidation. This is 2015 around Brexit. There was some weird Brexit stuff. And it consolidated, and then bam, all record highs. All right, it's just like, that's what happens. So, anyways, there you go. And it's the same. Yeah, if you go to the SPX, it's just gonna show you the same thing, just different ratios, right? So, anyways, yeah, there is some parabolicness about this, that this is nice and steady, and then this is like up big and then down big and then up and then down, and yeah, there's more volatility here for sure. But what I'm saying is, let's stop thinking about record highs and let's just analyze the market. That's what we do. Analyze the market. Okay, so for that, we need to get our posture. And we need to copy, then we need to insert copy, then we need to put in the 27th, and let's go. The V recoveries are very bullish. I agree. What makes us bullish? Well, we've got a great labor market. It's been a great labor market for quite some time, right? It was a great labor market during the Biden administration. The numbers are there. That's something that we have relied on in the market to help sustain things. We keep watching to see if that's going to change, and so far we haven't seen anything. So there you go. Long term. Last week we raised it 1/4 point. And as we sort of were popping back into this thing, you can see we're almost back in there. So, okay. If we get to the top, I'll raise it to 1.5. Which is what actually, technically, this green one, this one is actually 1.25. We're in this one now. So I guess maybe I'll have to wait and see. It's hard to see the transition. Are we going to transition from like this red angle to one of these green or blue angles? I mean, it's 1/4 point. Does anybody have theirs higher than I do right now? I'm at 1.25. I think an argument can be made for 1.5, but I feel like 1.25 is pretty solid because we just haven't seen the cycles to the downside to evaluate if there is a reason to give it more strength. Steve's the same. Okay. Fair enough. Let's keep going. U.S. China to resume tariff talks in effort to extend truce. Return of the meme stock. Has traders on alert for market froth. Okay. Nothing new. Nothing new here. Whoops. Let's drop it down to 6 months. Oh, I think I just lost my connection. Is that true? I think I did. How does that work? I don't understand how Thinkorswim works sometimes. What is happening? Like froze up on me. I have my other one open. Let me see if I can get charts. Hold on. Oh, this has me locked up. It's glitchy. Is anyone else having Thinkorswim issues? Oh, wait, here we go. Attempt to reconnect. Oh, well, that shut me down. That shut me down. Well, all right. I'm installing some updates. Let's go look at some other things whilst we're waiting. Yeah, let's just dive straight into our... You know what? I have new internet. And in fact, my mesh system was like not good enough to keep up with it. And I bought a new mesh system that I have to install. But yeah. I don't know what the deal is with... I think it's Thinkorswim on Sundays. Come on, Charles Schwab, do better. All right, let's do some major market analysis. We'll come back to it. I remember when I actually worked for Thinkorswim. We were called the Thinkorswim Group. I worked for an education company that merged with them before Ameritrade came in and bought the whole thing, and then before Schwab bought Ameritrade. But everyone's like, "What does this even mean?" And we used to hand out monkeys. Does anyone go that far back? They had these like kids monkeys, like the really long ones that you can like make them look like they're hugging something, and they had these shirts that would say "Got Vol," like got milk, but vol for volatility, and no one really understood it. But they Anyway, I used to give monkeys to my kids all the time. Everyone's like, what are you talking about, Scott? The monkeys were cool, I promise you. All right. Sector rotation. NASDAQ is still clearly on top. S&P there. Dow in the third place. Russell from behind. What we've been watching is, does the Russell catch up as we get to the scoring? And do we see it show us something different? Here's 133. And you can see NASDAQ, S&P, Dow, and the Russell is behind. The first place that we really have been seeing it is here. So the question is, are we getting enough to score? And the answer is no. It's good to see that it's moved into second/third. It's back and forth. It's in second. It's in third. It's in second. It's in third. It's in second. It's in third. So it's moving on the same trajectory as boom. There it is. It's in the same trajectory, but it hasn't moved into any kind of a leading position yet. Let's go to 22 days. I can just hear press asking for the 22-day. He was about to. I beat him to it. And you can see, okay, there's something there. It hasn't translated to other time frames yet. That's what we're waiting for to start improving our score, right? We can see the small caps. The market's not like, oh, I don't know. The market's saying, ooh, it looks like we might be able to see some interest rate traction. That's what this is indicative of. When we see the small caps move into a leading position, that's the explanation. But it hasn't done it in a way that's going to make us raise our score yet. And that's the big difference. No changes for me either, Stephen C. Okay, I'm going to refresh this, but we're going to go back in order now that my charts are back up. So unchanged for the weekly analysis, unchanged for the major market analysis. Unchanged here. At this point, I would say this is our trend. It's got over 2 months now. And how would we score that? Well, it's not real strong angle. It's a pretty good angle. If that's a 3 and that's a 0, I'd say that's about 1.5, 1.25, 1.5. It's about halfway up. And we are scored as a 1.5. That's as good as it's going to be unless we do what? Breakout. Boom, boom, boom. If we break up above this area, then we can be like, all right, now we can see something else start to form where it looks like it's more like this. And you can see those are different angles. That's what we're scoring, is that the angle of strength. 1.5, I think, is dead on. I feel good about 1.5. If the trend holds out, that's going to happen. All right, I'm here for it. Give me a higher high or a higher low, and we can move this thing. But for now, I think we're scoring it in a good place. Where's everyone seeing this one? Let's check in. Same, 1.5. Yeah, good, solid. It's not great. It's not like, oh, look how strong this is. It's a nice, solid uptrend. Love it. Okay. Volume. Okay, volume. I kind of feel like volume could ease back 1/4 point. Meh. That sounds about right. Let's go to 1 month daily. Let's ease off the extra space. And you can see I'm down to 2 days. I'm down to 2 days. And what do we typically do when we have that? We typically throw that out, which means we really have one day. And this was a half day that we gave credit to because it got way more than half. I think it was worth it. But at this point, I'm seeing this as an 0-1-0. 0 buyers, zero sellers, 1 buyer, 0 ties. Actually, that's not true. I should just give this a tie back here. This didn't have enough volume. This is a tie because it basically went down and came back and it didn't advance enough. So we'll call this a 0-1-1. Slightly in favor of the buyers. A tie goes to the buyers. For me, this is dropping to 0.25. How do you guys feel about that? That's where I see it. Now, you can see we still have a positive sloping line, right? We still have a positive sloping line. But I would say, yeah, we're seeing it ebb a little bit for now. We'll take this back down to 0.25. Major market. I don't know. I raised major market last week. Was I anticipatory, do you think, of small cap strength? If it was a 0.5, I would have left it as a 0.5 this week. But I see that I raised it last week. And I'm wondering, did we go early? Who raised theirs last week? Or who's at a 0.75 for major market? I see it on the 22-day. You see the battle. On the 66-day. I don't know that the small caps have done enough. I think I might have jumped the gun there a little bit. I'm gonna leave it. But I feel like I may have jumped the gun. So let's kind of keep an eye on that. Is anyone still at a 0.5 there? Trust yourself, Press says. Okay, fair. Steven says, I agree with 25. Are we dropping 0.25 from 0.5 or are we evaluating them? I mean, it gets you to the same place, right? It is dropping from 0.5 to a 0.25 because when I evaluate it looks like a 0.25. That's how I think it's basically saying the same thing. Whether you're scoring it fresh or you're saying, hey, this is not holding up from what it was when we had all that extra volume, 0.25. How does that sound? Does that make sense to everybody? Let's keep going. So yeah, good. This one was iffy for me. I'm gonna mark this with a little yellow, just a light yellow. I'm gonna put it here too. Should I have done that? That's the question. If next week it hasn't held up, I might ease it back. I'm not gonna do it this week. I'm just saying. Just putting it out there. Okay, let's keep going. Let's go look at sector rotation. Stephen D says 0.75 is the right score. Okay. I'm open to it. Sector rotation. We are coming in at a 0.5. So we would expect to see a good mix of growth sectors at the top. You can see here I have communication services, that's growth. Financials, that's growth. Technology's moved all the way back. Look at technology just barreling its way from the bottom back up in. Technology looks fantastic for us. Discretionary. Okay, looks like discretionary is trying to make some moves again. Industrials. There's our core 5 growth. Utilities has made a little bit of a run up. Staples is quite sideways. Materials is kind of turned sideways. Energy is ebbed back down. Healthcare sideways. So this is a strong bullish start. A good foundation to work off of. Let's go to 133. And we can see 133, it's more of the same. I've got industrials now at the top. And I've got technology, again, up at the top. I've got communication services. And then I have utilities. So of these 4, I've got 3 growth plus utilities plus financials. So 4 plus utilities, which we all know utilities has kind of a funky feel to it these days, right? Because of AI growth and demand, because of crypto growth and demand. Then we go to the laggers. We have staples sideways and kind of behind. Materials. Discretionary on this one is lagging behind a little bit, so that's why we don't have a 0.75 or a 1 score here. Healthcare's at the bottom, as is energy. Let's keep going. Here's our final point for scoring, and look at technology. Magnificent. That's where a lot of our core trades have been recently. We identify the momentum and we look to trade it. What else? Industrials, same kind of a thing. Also looking for trades there. Discretionary, communication services. Now, here's the deal. Discretionary and communication services, this is the market. So I only have 2 on the scoring time frame that are leading. These 2 are leading other sectors, but not leading the market. If these 2 were up here, a little higher, I would go ahead and move myself up to 0.75. And air conditioning, Bob Walker says, don't forget that. Oh, I got my bill. It wasn't great. Wasn't great. My kids upstairs it's like they don't, it'll be hot and it'll be like, they'll turn it down to 67. I'm like, that doesn't make it cooler faster. Just turn it to 73 and let it cool off. They know they don't do it. It's a constant battle. Luckily, I've got it on my phone now, so I can just pull it up and check it, be like, you dummies, and I'll turn it back up. It's a battle. It's a tug of war. That's exactly right, Bob Rowland. That is exactly right. Okay, so we have technology and industrials, but what does that tell us? That's our core focus, technology and industrials. After that, what are we looking at? A reemergence of discretionary. We still have strength in communication services. A bit concerned about financials, although there's been some momentum. So we'll see that as well. Let's finish up with what's coming. I think the 0.5 makes sense. I don't see any evidence, anything objective that says we should be raising our score to a 0.75. I think 0.5 still makes sense. In fact, you can see here, we got a little early. We did the same kind of a thing like we did on major market, and we dropped it back down. It was like tried, and then it's like, no, it's not there. And I'm curious if that's what I'm going to do next week with major market. But sector rotation still looks fine the way it is. 0.5. Yes, Stephen C. agrees. Anyone go ahead and make that uptick to 0.75? Did anybody like it enough to add that strength? Is anybody still holding lower than us? Let me know. Let's go look at the VIX. The ever important VIX. Nope, that's too much time. Let's go 6-month daily. Let's get the VIX up there. We finished at 1493. Nice to see 14 again. 14's not 13 or 12, but it's pretty good. You can see that this was this lower high on the 17th, and it did lead to some trades. That was a lower high, and we now have a lower low. So, danger signal. No. I'm gonna say no. Though you'll hear people, they'll be like, when the VIX is high, it's time to buy. And when the VIX is low, it's time to go. That's utter nonsense as a saying. Because it's I mean, yes, now looking back, you could say, if I would have bought here, right? If I would have bought here, it would have been great. Well, yeah, okay. Now looking back, this was our first opportunity. And what it is when we think it's turning lower, which means what? It means we think it's going to get more confident, which is exactly what it's done. This is getting more confident. But there's nothing here that makes us think it is low. But this was low, and this was low, and this was low, and this is low, and the whole time we just keep going higher on the market. Stochastics, yes. I mean, it does look like it could possibly what? Do another one of these. Another one of these. Possibly one of these. So, if you're carrying a large number of trades, would you look at a now, I would still wait to see something like this where it turns. Then I'd be like, you know what? I've got 5 trades on that I need to be looking at. What am I going to do? I'm going to hedge and then tighten up. But no, I don't want you to look at this and be like, oh, you should look at this and think this looks great. Great. Now remember, right now we are market posturing. Market posture. And then sometime between now and tomorrow morning, we're going to shift our market posture to trading posture. Those are different things. Market posture, how do I see the market overall? I see the trends are strong. I see the volume is good. Everything about what we see is good. But if at a certain point your trading posture says, hey, this thing looks overbought, I've got some trades on, should I hedge? Should I tighten stops? Well, then yes, that's a different story. That's taking your trading posture and starting to apply it. But from a market posture standpoint, what we see right now on the VIX is strong. It's favorable. What I'm considering is adding another 1/4 of a point. But I'm not going to do it yet. We need to get to 13. We need to get to 13s. Not 13 even, the 13s. If we get to the 13s, then I'll be like, okay, let's get it to 1.5. So if I have a lot of trades on, where do you put the hedge? On one of the trades or on the SPY? For me, it's the SPY. Definitely the SPY. Yep. I don't want to hedge things individually. I want to just put one on overarching 5 weeks out in time, 5% out of the money. That's my hedge formula. Yes, John, you're very welcome. That distinction is in the trading plan. If you look at your section 2, we try to say, hey, let's differentiate market posture. What do our rails look like? Trading posture. What are you doing right now? Right now, this morning, right now, today. We don't have a trading posture right now because market's closed. We're just kind of orienting. So great question, leading to a great discussion. So thank you. Okay, I'm leaving it. But this one looks like, now here's the deal. Volume is likely to stay here unless sellers come. I don't look at it and think, oh, we're going to drop to 0. Tie goes to the buyers. We'll leave it at 0.25 if we don't see selling. Tie goes to the buyers. That's how it works. Sector rotation looks like, if anything, it could go higher, right? If anything, it could go higher. Looking at the long-term trend, we didn't talk about what would make us lower the score. We talked about what would make us raise the score. When we look at the VIX, we're not like, ooh, this looks like it could go against us. It just made a new lower low, and we're talking about what would add a quarter of a point. So as we assess this market posture, if anything, we look like we're more likely to veer towards a 6 than towards a 4, right? Or even a 5 flat. We dropped a quarter of a point this week, which means nothing. That's not like, oh, we dropped a quarter of a point, I'm that much more bearish. No, it just is settled in. Remember that we tend to see these where we stay in a range for upwards of a couple months, and then we see, does it break to a better one? But this is great, 5.5, very strong. What should we be doing? We should be looking for bullish trades. Stephen D says 2 weeks in a row we're right at the same place, even though we got there a little differently, and that is not uncommon. I can tell you, I've taught this same methodology for 10, 15 years. Happens a lot, and that actually leads to some of the best discussions where someone's like, I see this better but this worse, and then it's like, oh, okay. So great, perfect. Tell me if you see anything that we missed. Let's jump into the week ahead. Calendar is jam-packed. We still have earnings. It's still earnings season. But now, on Monday, the calm before the storm. Nothing scheduled for Monday. Tuesday. On Tuesday, we have retail inventories, but I don't really see much in these things here. What do I have? Same thing with the home price index. Consumer confidence, that's a big one. And you can see we dropped down. We want to see this back above 100. We are at 93 and expecting to get to 96. We would love to see a consumer confidence bump. Job openings, we were at 7.8 million, and the expectation is that drops by 400,000. But I'll tell you this, anything above 7 million is still like high based on pre-pandemic levels. There are some questions about, are there actual jobs? Or do companies list jobs that they're not actually hiring for? So there's different things that add skepticism to it. What ranges of posture reading can be called bullish, bearish, neutral? So for me, I would say, -1.5, -2 to +1.5, +2. That's kind of neutral, right? I would say neutral. And if I was like a 1.5, I'd be like, I'm at the bullish end of neutral. If I was a -1.5, I'd be at the bearish end of neutral. When I get to 2 and 3s, then I'm moving into bullish territory. Like, this is slightly bullish, it's improving. Although it also depends on the direction. So if I'm going from a 0 to a 1 to a 2 or 3, slightly bullish. If I'm dropping from a 5 to a 4 to a 3, so the direction is also important, right? We're much more likely to trade bullishly at a 3 if we got there from a 1 than if we got there from a 5, right? Because that's going to help us to understand the momentum. 4 or 5s, solidly bullish. 6, that's when we have a nice, very bullish, right? We don't see 6s a lot. We got a good taste of the 6/7 market post-election all the way up until right after Christmas, and it was some phenomenal trading during that time. Does that help? That's the way that I break it down. You don't see 8s. If you get into 7, that's about as good as it gets, and you just hope it stays there as long as possible. Okay, so we have job openings expected to drop. Now, Wednesday, we have ADP. Last time they had a negative surprise. Negative surprise, minus 33,000. That's expected to go back to 82. That's good that it's growing, but anything less than 100 is kind of in a perilous place. GDP, Bob said, huge difference. Yes, we went from a negative 0.5, looking to try to get back to 2.3. Our objective in the economy, we would love to see inflation at or near 2%, GDP at or near 3%, where the domestic product is growing faster than inflation. If we can get to that point, that's phenomenal. Phenomenal. It's really what we're looking for. Interest rate decision. There won't be a decision, but there will be a press conference. We're expecting this to stay at 0. We're expecting them to give an idea. Now, the hard thing is that they have the press conference, and then the very next day, the Fed's favored PCE inflation reading, that's their favorite. What's the expectation? We're expecting 0.1 to jump to 0.3, 2.3 to jump to 2.5, 0.2 to 0.3, 2.7 to stay flat. These aren't horrible, but they're not enough. If it goes up, we're not gonna see interest rates come down if we're stalled. It's just not gonna happen. And they're saying that this is when we're actually seeing the tariffs translate into higher prices. So the Fed is not going to be like, well, we saw it go up this month, but we're hopeful it won't going forward. So we're just going to go ahead and knock it. It's not going to happen. If we don't get I think we could see, like, if this went from 0.1 and it came in at 0.2 and we thought it was going to be 2.5 and it came in at 2.4, then we could maybe still see it in October. But if we see the numbers jump, I don't see October in the cards. Jobless claims is in a good place. It's nice to see. That number stabilizing. It never got above 250, which is our threshold of concern. Never got there. Income supposed to pop up a little bit. Nice. Spending jumping is not helpful for inflation. Let's just keep that in mind. And non-farm payrolls was at 150, which was maintenance, expected to drop to 102, which is better than negative, but yeah, it's starting to become less sustainable. Unemployment rate expected to jump a little bit. So a lot of data coming out. A lot of data that we're going to be watching for. Let's get to the watch list. Let me get this week's note card. And yeah, I write the weekly list on a note card. Of course I do. What else would I do? Oh, man, look at our numbers today. Amazing group today. Okay, let's start at the top. AAP, Advanced Auto Parts. I got to tell you, I actually would still be willing to trade this. And I know you're like, wait, but yeah, gapped up. Something they liked, and then it fell back down. This is still my last resistance level. This one right here. This one here. Now, you're gonna see candle purists who are like, no, because there's a little shadow on top. When there's a little shadow, they tend to take it more into anyway. Yes, but hanging man, and actually a hanging man tends to show up more up here as a dropping pattern. And this tends to be more of a hammer if we think it's at a support level, hammering out a bottom. I would say right now, I need to see, this is my last support level. If we come in here like this and then we start to go, I'd be like, yeah, that looks pretty like we hit some support and now it's ready to bounce. I've got a target. So, but good look at that. I'm going to keep it on my list. I still think it has potential. Apple never materialized, right? If you got in this trade back here, it probably broke even. It went up a little, but time decay got you. Now we're this close to earnings that I'm going to say you're a spectator now. There's nothing there for us now. Amazon, the trade was back here, and it had a hiccup, but then it kept going. Yeah, I think you could have squoze something out of it. But there's earnings now. APH, I'm going to put APH on the list. Let's keep an eye on it and see. It's kind of funky post earnings. We'll see what happens. AXP, I like AXP. That one's pretty new to us. Bank of America. If you're in it, you're starting to think, am I going to get to a new high or am I going to stall out here and have a pullback? If I do, this would be more of a triangle pattern forming here. So that if it came down and turned, that's where our next trade would go. I love trading at the end of a triangle with the expectation it's going to bust the triangle. So I definitely see Bank of America as having some potential for us. Beyond, this seems like it's maybe a bit of a meme stock, but with them being in favor, if we pull back into this area here and then turn, yeah, let's think about it. Caterpillar overextended, nothing there now. Cameco overextended, earnings coming up. CLS, just there's some chop in some of these, and you've got earnings right around the corner, nothing there. CNM overextended, I need a pullback. This was new to our watch list. I have a tendency to not pull the trigger when they're new, but this one would have worked out fine. Good addition. Looking for the next trade on this for sure. Capital One, yes. Yeah, it jumped on earnings. Had great earnings. Smashed it on earnings. If we can stabilize here and bounce, absolutely. Oh, this is a prime setup. Coupang, I like the name of it too. It's fun to say. Try it. Coupang. Coupang. I don't know why I like it, but I do. I like the trend. I like the pullback. I've got just enough time before earnings. I'd love for that signal to come Monday or Tuesday. Just enough time before. Let's put an asterisk next to that one. That one's looking real nice. Cisco. I don't know. Are you grinding it out? I would say you could. Right? I know a few of you took it. I would say it definitely is still there. DoorDash. Same thing. Got a new one. It's there. It's a little bit too late now. EA Sports. If it wasn't for, I guess it's not sports, just electronic arts. The earnings are coming up. You got to be careful there. So that's a no. Earnings there. That's a no. GE's on our list. GE's on the list. That's looking good. GE Vernova's overextended. Gold. I don't know. Is this? It's very sideways. Gold's been very sideways at these highs for quite some time. So I'm going to be a pass. If Glenn reaches out and says he thinks it's setting up, then maybe something, but not for me. Google. Yes, on a pullback especially. Glenn says it's close. There you go. There you go. Google, I would say, is very much something that could be a trade soon on a pullback. Goldman, it broke this little consolidation. I don't know. Hasbro. Post earnings. Yeah, I like Hasbro. How did they do on earnings? Good again. I'm going to put that on my list. I'm looking for things in discretionary. Hood. Oh, Hood looks great. If not for the earnings. You just don't have time. You just don't have much time. Howmet, same thing. You're right there. Earnings are still kind of impacting us. IBM smashed on earnings, and that's why we don't hold through earnings. IWM, no. JOBY, I don't know. Is that breaking? I didn't like the break, but that could be a Heiken Ashi. It could be a continuation. Let's put it on the list. Levi's. I still think this is viable, Levi. But it's got to go pretty soon. Southwest, no. Las Vegas Sands. We liked it if it weren't for the earnings, and it did well there. Meta. Earnings are coming up. Morgan Stanley. Kind of flat. We got to wait and see. Microsoft. Strong. Good trend. Just turned. Earnings in 2 days. Micron is in consolidation for me. That's a no. Netflix consolidation. That's a no. Nvidia still looks good. But our trade was here on Palantir. Looks good. Let's ride. I mean, I'm looking for this one this week to be my best trade. We don't have all the way until the end of this thing. If we can get there fast, great. 175 on the 6th. But I only have until the 4th. So I might have to come up here and say, you know what? 171.25. If it's getting close to the time frame, then that might be where my target is. It's going to be a good trade. It's hopefully. Who's got a piece of that one? Let me know. I'm always happy when I get to put an alert out on PLTR. If I were to go back and look, I would have to say that's our most profitable for all of our trades that we've done. QS, yes, put it on the list. I'm looking for a high flyer. Boom, up, pulls back. Boom, up, pulls back. Looking for the third in this parabolic move. Definitely looking for something on this. QuantumScape. Is this meme? I don't know. I'd have to go look at the short interest. Let's go see if we think it is. What time is it? Oh, okay. I'm close to the end of the watch list. Humor me. Just humor me here for a second. Been in QS since 2022. Okay. Love it, Bob. QuantumScape, auto parts. Short interest. Okay, Miguel, tell me about PLTR. Short 1.88. No, that doesn't feel like a meme stock to me. Maybe there's just high expectations from the battery. Okay. Fair. Putting it on my list. Roblox. We just don't have a lot of time. We just don't. It's on top for 24 and 25, Miguel said. It's our champion. It is our champion. I like Roblox a lot, but I got to wait and see what happens with earnings. Reddit. It's trying to move. Rocket Lab. Yeah, Rocket Lab. Okay. This is a high momentum that could give us something. RTX, overextended. SPY looks okay. TME, 10-cent music. Yes. I'm liking some of these that we're finding here. Looking for this thing to make its next move. Tesla is a no for me, but we'll watch it still. Taiwan Semiconductor, very strong as well, but we took Palantir because Palantir is our champion. Uber's just kind of breaking even. We wanted it here, and then we wanted it here, and then it rolled, but it hasn't broken. Hasn't broken, but it's got to go now. We don't just sit and just show patience after patience after patience. It's time. If it goes, we stay with it. This week, if it just flounders, it'll be time to cut it. That's what I think. We'll talk about that one in an ongoing fashion. Here's Visa. Looks fine. Here's Walmart. Meh. Here's Win. I'd put Win on the list too. Did I miss writing something down? I got TME, Tesla, TSM, Palantir, Apple, and Cisco. Top. Okay. Yeah, Cisco's had some good ones. We love trading technology, right? TSM's on the list. Rocket Lab is looking good. QS is looking good. I put stars next to Coupang, CPNG, QS, RKLB, TME, and I think Win looks pretty good still too. Consumer discretionary seems to be where we need to go find some additional strength, if you ask me. So let's look for that on Monday. Should be a good working session tomorrow night. But lastly, before we go, boom. We just wrapped up section 3. We are now working on risk management. Okay, you should have an idea of your portfolio heat. How much risk for the entire account? Trade risk, how much risk on any given trade? Number of trades, how do those two work together to help me understand how many trades I should have? How do I adjust risk? And more specifically than that, how do I correlate risk to market posture? So your risk should be definitely influenced by the fact that we are a 5.5 and have been there for several weeks, right? The types of trades we take, the amount of risk we take, all of that should be absolutely influenced by our market posture. And then we will look to translate market posture into trading posture. When we pick this up tomorrow, in about 21 hours from now. Yeah, Miguel, definitely. Flag me. Send me a message via Circle. And I will definitely like to do that. Don't forget about your tsunami indicators and your hedging. Don't forget to think about when is it time to take a break. And that is section 4 of our trading plan. Don't forget that the videos for trading plan exist, and that the trading fundamentals class. If you're like, hey, I want to dive into this more, great, go to the classes. The resources are there for you and are ready for you. So yes. Whew, good day. All right, it's great to see everybody. What class discusses the tsunami indicators? That's in the risk management one, but we can have a specific discussion. It's really about what are the things that cause us to be like, whoa. Our number one is the high or low on the VIX, but we also keep an eye on volume. And if we see increases in selling volume, we keep an eye on sector rotation to see if we see any of the defensive sectors start to pop. We keep our eye on the major markets to see if there's all of a sudden a surge in the Dow and a drop in the Russell and the NASDAQ that indicates defensive posturing. Any of those things can flag us that something bad is developing. John says I'm due a break. Ugh. I understand. Thank you guys. Everybody have a great rest of your Sunday. I am going to go water the bonsai tree. I need to water my grass too. Anyway, good to see everyone. See you tomorrow morning. As always, happy trading.
Recording stopped.